Today, we're going to be taking a look at 4 different companies, starting with Netflix, which I am currently holding and down over 20%. The other 3 are Mag 7 stocks with the highest upside potential from their current stock prices. So when it comes to Netflix, they are expecting their revenue to double in 2026 to about $3 billion. The stock is the cheapest that it's been in the last 3 years after falling significantly over the last few months. And now analysts, everyone has their eyes on Netflix's ongoing bid for Warner Brothers, which is a strategic content push that would expand their franchise and long-term global library, giving them a new stream of income. So when it comes to my timeline investing into Netflix, it was just this past October, I decided to sell some of my Disney shares and move it over to Netflix in mid-October when the stock price was about $111. Just a few days later, the stock split 10-for-1 was announced. And then on November 17th, it started trading at the new pricing after that stock split. And then before you knew it, we were seeing those headlines about them wanting to acquire Warner Brothers. So on the day, Netflix is up 2.4%, and I'm holding a little over 10 shares with an average price of $111. Netflix price target is $114.13. So because of all of the volatility that's happened right after I decided to invest, it's one that I'm going to have to hold for a while in order to see significant gains on it. But I'm not panicking. Netflix is still evolving when it comes to their ad revenue growth, continuing on their path for global expansion and putting work into their content strategy. So I'm relying on those long-term price drivers to lead to a turnaround when it comes to this stock. But it's not a significant position for me. It's always my goal to make money. So I incorporated this as an investment and believe in the company's fundamentals and that it will turn around. So leave me some comments. Let me know if you've been holding Netflix for some time now, or if it's a newer position into your portfolio since it's been having these pullbacks back to the lowest point in 3 years. So we have some time when it comes to Netflix next earnings. It's not going to be until mid-April, but we'll be watching to see what's going on with the ad revenue, the subscriber growth, that content strategy, and forward guidance. Good numbers could quickly shift the sentiment and bring back the confidence that investors had when it comes to this company. So, like I said, not stressing about Netflix, smaller position, and I'm a long-term investor who has had to go through these periods before of being patient. Now on to 3 Mag 7 stocks with the highest upside potential based on their current price targets. And those are Nvidia at 47%, Microsoft at about 50%, and Meta at 30%. So Nvidia is down over 5% today. They recently reported strong earnings, but the stock has been pulling back. Nvidia, like other big names, including Apple, can drop like this even after good earnings because the market wants them to have spectacular earnings. We also have to remember that everyone is not an investor. Traders are going to sell and lock in their gains. And there's also a lot of tension around AI spending. So this is impacting Nvidia and other companies associated with this sector like Broadcom, Applied Materials, and ASML. Out of the indices, the NASDAQ is being hit the hardest because it is more tech heavy than the Dow or S&P. But if you're an investor into those individual stocks or an ETF like SMH, the VanEck Semiconductor ETF, we have to remember that that volatility is what you have to pay for the potential high growth. When it comes to SMH, you'll be getting the highest exposure to Nvidia, Taiwan Semi, Broadcom, Micron, and ASML, with over 30% exposure to just Nvidia and Taiwan Semi. So SMH is down a little over 3% as of the time that I'm recording, but let's think long term. Over the last 5 years, up 241%. Over the last year, up about 69%. And when it comes to Nvidia, they're giving it an average price target of about $273. Now, on to Microsoft. Recent news shows us that they are teaming up with multiple partners. These partnerships will help them to continue to build on their cloud infrastructure as well as AI adoption. So Microsoft's current stock price is $401.72, just up 0.2% on the day. Over the last year, up 0.5%. Analysts' price targets have this company at about $600. And what many people may not know and impresses me so much about this company is that they have billions already locked in future contracted sales that are on the books from long-term enterprise agreements. That means they have revenue locked in, even if there is a market downturn. And they're continuing to expand in areas like Azure. So this is real cash flow that investors like me will be seeing positively impact our portfolios in the future. And the last company we're going to look at today is Meta. And they recently announced a multi-year AI chip supply deal, making them a bigger player when it comes to data centers. So this is an area with huge growth ahead, AI infrastructure. And seeing partnerships like this between Meta and Nvidia is important for us shareholders to make note of and have an understanding of. So when it comes to Meta, their current share price, $657. And analysts are giving it a price target of about $866. So I'm holding a position in all of the Mag 7 and a few other blue chip stocks, as well as my ETFs for more stability and additional diversification when it comes to my portfolio. But I must admit, I am heavily into tech. Even in my S&P 500 investments like VOO and FXAIX, you'll be getting exposure to tech because they are heavily weighted in those funds and they carry the highest market caps. So when tech rotates and shifts, we're going to feel it in our portfolios. It's a part of investing. And when it comes to my portfolio, I'm just focused on quality. It's always great when you buy low on a discount, but I'm not panicking with any of the positions that we went over today because the fundamentals are still strong. So leave me some comments and let me know your thoughts. Do you struggle when the market dips? Are there positions that you sold out of too quickly and missed out on the upside potential like we're seeing forecasted, projected when it comes to these companies? As always, I'm not going to be shaken out of my positions because of headlines. Just getting an understanding and then tying that back to the company's fundamentals. I don't stress on always trying to buy the dip. I continue to invest even small amounts and then incorporate larger buys if my budget permits and my alerts or limit orders keep me on track to catch a more ideal price that I've been waiting for. So if you're not already, like, subscribe, hit that notification bell, leave me some comments. Which Mag 7 company do you have the most confidence in? Thanks for watching. Okay, bye.